It's my great pleasure here to be hosting a panel itself rather than just emceeing the whole thing. We're looking at the wallet. The wallet is the key to igniting the crypto revolution. My own background, for people who don't know me, I spent a long time way back in 2013. I met the team developing one of the first Bitcoin explorers, blockchain.info. And the most important part of that project became the blockchain wallet, which was a self-custodial wallet. Not your keys, not your coins. We all know that discussion. On the panel today, we have 4 other people where the wallet is a really, really key part of their projects, and where, as we all know, it's the primary point of interface to the customers and the people who are using the things that we're building in Web3. So wallet's going to be a super important part of it. Fortunately, there are many people building different kinds of wallet and different ways of storing assets. So we've got 4 of them on the stage today. I'd like to ask questions, and maybe you can introduce yourself about what you're doing in the project at the same time. So Itamar, I looked on your website of Argent. You say, we could see that crypto had the potential to be the next era of the web. I think we all agree with that. But it was too difficult to use and too easy to make mistakes. We wanted to fix that. So talk to us a little bit about Argent and how you address that.
Sounds good. But great to be here. So I'm Itamar, one of the 3 founders of Argent. So we are a crypto wallet. Our focus is really bringing step improvement, 10x improvement to usability, to security of the space. So we got rid of things like seed phrases, bringing feature like fraud monitoring, and really make that experience as easy as using the latest neobank app you might choose, while staying fully non-custodial. And I think, well, in this conversation, I think no one can really say where crypto will go, but I think one thing we know with certainty is that there will never be some kind of global permissionless financial system where every user has to hold some kind of secret, such that if you lose that secret, you have lost all of your assets, all of your money, and even your identity. And if I have your secret, I have now suddenly all of your money. And that's really the starting point of Argent. This will, I guarantee, never happen. And so at Argent, we are focused on how to create an experience where people can make mistakes, have the safety nets we are used in the current financial system, while being in full control of their assets and identity.
And how does that work when Argent doesn't operate any longer?
Then the experience is degraded. It's not anymore of a beautiful, great product, but you still can, get back all of your assets and your identity. I think that's really the key for us.
I agree. Chris, you talk about the NFT space, and I read on your website, you're on a mission to make NFTs understandable and accessible. So tell us about that, and tell us about your company as well while you're at it. Floor.
Yeah, sure. Hey, Chris, co-founder of Floor. As my esteemed colleagues shared, we're trying to make NFTs understandable and accessible. Very much like Argent's mission, there are too many systematic barriers to getting in. As you get further in, it becomes harder. I truly believe that NFTs represent the future of ownership and the next 10 years of not just kind of important assets, but important underlying technology. And today, adoption is hard. Early adopters as a set of representation of our population look like the set of early adopters of almost all technology, white dudes. And there's a lot of systematic problems between being a NFT consumer, owner, holder, and being part of that revolution, and where a lot of people are. And so we're trying to build technology to solve some of those problems. Today, we're focusing on helping people to understand the value of their assets and understand the kind of broader NFT ecosystem. But then you start getting into one of our most common questions is, when are you going to build a wallet? If we do build a wallet, we'll build a wallet that looks very different to any other wallet out there, because today wallets are built around metaphors of managing assets and not representing, I think, stronger concepts like identity and understanding, creating a home for a set of things that are not just money, but a culture, which is, I think, what NFTs have really given us, kind of that intersection of culture and money. I'll shut up, but that was...
No, that's fine. Thank you. It's interesting. We'll come back to that in a second. Kaare, You told me before again that you guys are really trying to bring ID into Web3, and I think we all agree that identity and anonymity is a problem in Web3. Tell us about what you're doing at Concordium and why and how and stuff like that.
Absolutely. So, yeah, great to be here. My name is Kaare. I'm the CTO of Concordium. We're a layer 1 blockchain, which has a unique proposition, which is that in order to get an account on Concordium, you have to basically identify yourself. So you go through an identity verification process, which is literally snap your passport and provide a liveness check. And then you get a digital ID, which is in your wallet. So once you have that, you can start doing transactions. And every single transaction will have a reference to your ID baked into the core blockchain. It's still private. No one can go and just open it up. But we have this infrastructure where anonymity revokers, which are separate entities, legal entities, can be called upon, and when they bring their keys together, you can unlock the ID on the chain. It's not actually the ID, but it's the reference to the ID with a reference to the identity verification entity that did it originally, and then law enforcement can go there and get the actual identity of the person. So that way, we sort of anticipated that regulation is coming, and this blockchain is actually built for that, sort of at the very basic. But that's not really what's exciting, right? The exciting portion comes when you have that ID in your wallet, because now you have self-sovereign control of your identity. We're building an infrastructure where you can build D-apps that actually ask you questions about the user, which is super powerful. So imagine that you're selling liquor online, or you have a bottle shop or something. You go to Core's bottle shop with your browser, you open it up, you put some soda pops in your online shopping cart, and at the end you also decide to put a bottle of whiskey in there. And then you go to the checkout counter, and my bottle shop then says, oh, there's a bottle of whiskey, I need to know if you're older than 18. Using simple JavaScript, I can now ask the wallet this question of the user, and the wallet will then, if you have like a browser plugin wallet, the wallet will then pop up the question to the user saying, Core's bottle shop wants to know if you're older than 18. Would you like to reply to that question? And if you say yes, the wallet will craft a zero knowledge proof, which can then be returned, verified, and actually even stored with the original record, saying that at this time, someone bought liquor at the bottle shop, and here's the proof. So if anyone ever comes and says, you've been selling liquor to minors, you can actually say, no, I haven't, this is the proof, right? So yeah. So for us, I think identity in the wallet is just the beginning, and we can talk more about that, but that's where it is.
Yeah, I don't know if this is the format, sorry. It's non-custodial, but it's KYC required.
Yes.
That's fascinating.
Yes.
Yeah, it is. Yeah, I think it's interesting. I mean, we've got wallets now. What do we have in our wallet today? I mean, we used to have coins and notes in our wallet, but actually we don't anymore, right? We have tokens, we have credit cards, we have tickets, we have all sorts of other things, our ID and stuff, but we don't actually have money in it any longer. And maybe it's funny that we've used that sort of analogy there, that a wallet is wallet. It's kind of going back into a world that we've actually moved away from to a large extent. Tycho, you're doing something also extremely interesting with wallet and Bitcoin and stuff. Please.
Yeah, that's right. No, hi. Nice to see everyone here. I'm Tycho, general manager at Trust Machines, and Trust Machines is a company that seeks to build the biggest ecosystem of Bitcoin applications, right? So I think we very strongly believe that it's a bit of a foregone conclusion that we cannot build on Bitcoin, and we've got the most decentralized computing network in the world here, and we can build exciting stuff on it, using Lightning, using networks like Stacks to build on top of it. Now, I specifically work on all the stuff we do in the DeFi space, which is specifically a protocol called Zest protocol, which is an under-collateralized Bitcoin lending app. So you've probably seen the BlockFis and Celsius of this world, and then trying to do that through smart contracts is probably very needed. Having seen the events transpire of this morning. Mm-hmm. But yeah, I mean, to onboard people, and especially Bitcoiners or people who have Bitcoin, into these kinds of ecosystems or using decentralized finance more, we'll need like a very good interface, right? It will need a very sort of polished starting point from where they would feel comfortable to use their assets to actually earn a yield. Now we we will be working on some interesting things in that space as well. Some things I cannot disclose yet, but I can sort of shed some light on, I guess, our general thinking around wallets and what sort of purpose they should serve.
Yeah. Okay. Chris, I think all of us here believe that users should be in control of their own assets. Certainly, that's what the decentralized future is about. But then Dimitri from Copper the other day, he was saying at Money 2020 that like 75% of users have no clue how to recover their assets when they lose their phone and all of that. So how do we work that balance between being in control of your assets and yet like losing your assets? It's kind of a problem, right? Do you have any thoughts around that?
Yeah, I probably break a little bit from the conventional wisdom of the group up here, largely because I think where my priority sits is how do we make this simpler and easier? And importantly, beyond just it being easy, it seeming easy and it not feeling scary. And I think even more so than the risk of losing your money, I think everyone has heard a story of someone who's lost their money or been hacked or whatever it is. And it just seems very scary and overwhelming today to get into crypto. I think there's a tools for jobs kind of thing here. There is a place in the world for non-custodial, and I think there's really powerful things you can run out ahead at. Like we were just talking about this before, you can build more quickly non-custodially than you can custodially. I think where there is product market fit for a crypto kind of use case, and today there's basically exactly one, which is speculating on assets as like fungible tokens. That's really the only place we have product market fit in crypto today. And so companies have sprung up that have become massive and have built infrastructure and metaphors. And the best way to do that for 100 million people is with a custodial solution. Like it's so much easier. You don't care about most of the benefits of self-custody anyway. And in the event where Coinbase is not able to satisfy any deposits on hand, you have way bigger problems than your couple $1,000s of BTC that's kind of stuck in there. And so I think as we find fit in other places, like NFTs where I work, we've really only found product market fit for one thing, which is trading dumb pictures of apes on the internet. We will find product market fit for other things. We'll grow better metaphors. And I don't know whether those will be custodial solutions or non-custodial solutions, but I know that as soon as Coinbase Prime supported blue chip NFTs, I sure as hell sent them there because like I don't want to be responsible for keys for things that are worth tons of money and like I have to now go and like be a custodian myself. It just doesn't make a lot of sense to me.
Yeah, what do you think, Itamar? How do you make all that easy for the user and still give him the protection that's needed, not just from himself but also from the operation? As we said, what if Argent goes down? What if Chris's company goes down? Phil goes down? I mean,
yeah, so
what's happening? We just saw Celsius this morning. Apparently, it's not doing great today, right? So
it's a funny day to be up here.
Yeah.
I think Chris has actually a lot of good points, although we are fully non-custodial, and that's really our mission. I believe if you remove Argent from the equation, for 90% of people, a custodian is probably the most secure solution at scale. We are used to using banks, and most of people are not worried about that. And I think for us, it's very hard to sell as a user benefit. We see it as a company benefit. So the pace of innovation where you don't have to, there's a reason banks can't innovate, and it's because they sit on all that money with massive risk, and we're seeing some of those risks today. I think the usability, I think we are there, honestly. I don't think we see massive unknown in terms of execution on where to get to an experience that is non-custodial and as secure. So we had built it on Ethereum, layer 1. It became very expensive. So it was more cost issue than a usability issue. We have created mechanisms where you're in full control of your assets, so non-custodial, where you can rely on other parties for recovery. So if you think about your bank, your only option is your bank. With Coinbase, your only option is Coinbase, and it might take you weeks or months to deal with their support. With Argent, it's basically you're in control. You can trust Argent for that, for recovery, but we can't take your assets. You could trust yourself, use other device like a hardware wallet, or you could trust even a network. In some region, it's more friends, family. So we had solved really, I would say, the pure holding of assets and recovering them. We have also abstracted a lot of other issues. So we talk a lot about the keys, but already even paying for your transaction is a massive headache. So in the beginning, Argent, you wouldn't even have to pay. So we have abstract this layer, or you can pay in stablecoin, etc. So again, this is a solved problem. What has actually kept us more busy the last year was how do you make that at a much lower cost. The big advantage today of custodial solution is cost. Trading on an exchange, you are not on chain, you are just trading numbers on a database, it's free. On chain, it has a cost, and so the migration to layer 2 solutions has been probably where most of our engineering effort has been today. And you also mentioned, I think, an interesting point. I think from a security standpoint, what now keeps us most busy is protecting users against them mistakes, so against themselves. So protecting a user that is listing an ape at 100 DAI instead of 100 ETH, and that happens. And so now we have the design for that. That's really where most of our engineering goes. So I would give it 6-9 months where we can finally be on par with those custodian solutions.
Chris, do you have a view on that? You're nodding.
I do think everything you just said is so smart, and I'd be fascinated to hear about how the kind of trusted recovery works. I think that's so cool, and people are building like really cool stuff at the protocol level. I actually don't think this is a custodian or non-custodian question for me. I think what you said at the end is really interesting, which is that's product design. That's understanding what people are really doing with the thing, and then building metaphors and building protections and rails and interactions around that. And like we created this super general purpose protocol, we created the EVM, we created like a full programming language, and people can do all sorts of cool stuff with it. Then we find narrow areas where people actually want to do stuff that anyone actually wants to do and is useful, but then we're still stuck interacting with things that talk to us in basic protocol level kind of constructs like signing transactions and internal transactions that make internal account movements within that, where what you want to know is like, am I listing my ape for something that is close to the floor price? And so what I'm really excited to see is people build products around use cases that matter, whether they're custodial or non-custodial. Is like, I think there'll be places where custodial will be easier, but I think those examples are the things that would make me really bullish on a wallet, whether custodial or otherwise.
Yeah, and we heard Julian earlier today. He was talking about the DeFi world and how people are going to need to prove that they're capable of interacting. In the financial world we have today, we are not allowed to issue product to people who aren't capable of, or the viewpoint is they're not capable of managing that product or understand those risks. That was one of the things I think, Kaare, you and I were talking about, is how one can issue credentials, how one can do that to people which can interact with contracts and things, and they hold them in the wallet. Maybe you want to talk a little bit about that.
Yeah. So I think if you look at the way this space is probably headed, there is a lot of talk about how first regulation is coming, right? That's what we're catering to. But I think actually more interestingly, how can you sort of go towards a more decentralized world? Like there's like vision documents out there talking about the decentralized society and what that means. There's this whole idea about what we call soul-bound tokens, which is really NFTs that are non-transferable, right? So slightly simpler actually than real or other NFTs that we've known, but the idea being that you can craft a token on chain that represents some portion of you in some context, right? It could be your employment with some company, it can be your university, a diploma, it can be your loyalty card with some company, and some of these soul-bound tokens or non-transferable NFTs are really something that exists for the entire duration of your life and even maybe beyond it. And others are actually things that are more ephemeral, right? The company might want to terminate you at some point in time, so they probably want to burn that little NFT that represents your identity when you leave. But others you might want to burn yourself, right? So there's like this whole thing about how can we have something on chain that represents you without others being able to see it unless you want to, right? Mm-hmm. That's, I think, where this is headed. And if you look at what our wallet will, at least the roadmap we're putting in place right now for our wallet, it'll be heading in that direction. So we're not thinking of it as sort of a way to just hold cryptocurrency. We're thinking of it as a way for you to interact with all kinds of life situations, really, where you use the blockchain for some things, other things you have in your your wallet, right? Some things you don't want to put on chain, like your ID, for instance. In Europe, we have the GDPR regulations that basically say you have the right to be forgotten. Once it's on the chain, it's kind of hard to be forgotten, right? So you can't really just store that kind of information on the chain, but you can store reference. And then, if that reference is not readable by others than authorities, then you get into a different kind of situation. And then other things you might actually want to reveal about yourself. It could be social things like you're playing this game, and now you become sort of a very good gamer, and you help some of the younger ones that are coming in, and you become like a super player, right? And you get this massive star rating. You might want to actually show off and saying, hey, I'm like a 5-star something on this platform. In other contexts, and you can now start using that. If that's on chain, that's absolutely massive. But you probably want to be able to select when you want to get that information away, right? Not just leave it there randomly. And other times you might actually want to boast about it, and you might actually leave that some kind of token that others can read. So I think this is just opening up. I think we're just seeing the very beginnings of where this will be headed. We're working hard on figuring that out.
It's all part of the way to the decentralized future. Tycho.
Right. Yeah. No. I think I'm sort of hearing a few different things here. I think in general, like in crypto, we have these sort of two different directions, right? Like we sort of saw it in what you were talking about with sort of custodial versus non-custodial, solutions. And it's like, yeah, it's much easier to be, custodial and that. And I think there's sort of two paths shaping up, right? There's sort of the one sort of Western world path where we're like, okay, we find it okay to rely on our legal systems because they protect property rights, and we can just use this chain for instant settlement, and that's great. And then you have like this whole other piece of the world, right, where people are like, well, I would probably not really rely on the sort of legal system here to protect my property rights, right? And I think that's sort of where you'll see kind of two paths in crypto, right? Because like for a lot of institutions that we would work with, for example, for Zest protocol that we're incubating from Trust Machines, right? For them, it totally makes sense to be custodial, right? Because otherwise, what are they going to do? They go to a conference, but they still need to sign loans, so they'll probably take a ledger with them in their suitcase to sort of sign things, and that doesn't sound like a great idea. But then in this sort of whole other world, right, outside of the Western world, there's all these people that want control over their assets and would want to openly earn a yield on that without having to rely on the legal system that just basically cuts them out all the time, right? And I think that's sort of the two different worlds that we'll see. And here I'm hearing a lot of the sort of Western world speak, but I think the other one we shouldn't forget about.
But what do you do in that world to, let's call it, protect the user from themselves in a way? This is a lot of the, in your world. What stops me lending more Bitcoin from you than I can afford to pay back?
Oh, right. I think in sort of the with how we're building Zest protocol, right, is that we have on the borrower side we have only institutional borrowers, right? So they are like KYC'd entities, they are sort of known people, and they can borrow under collateralized as well, right? But then on the lending side, there you will have basically pools that are permissionless, right? There will also be permission pools for certain institutions, but many of them will be permissionless, where anyone can basically deposit their crypto or their Bitcoin to, which basically gets lent out to these KYC'd institutions, right? So on the institutional side, we're sort of optimizing for custodial solutions, making it easy for them to interact with it. They will probably do arbitrage or market making on centralized exchanges and so on. Yeah. But on the other side, right, on the sort of, I suppose, general public side, we're sort of optimizing for helping people who have savings in Bitcoin to help them to earn a yield on that, right? And that'll be a very different kind of persona.
Yeah. Okay. I mean, one of the challenges I think we look at now is that for all of our fancy talk we've got here, we've got in the decentralized world at least, we've got MetaMask as maybe the largest wallet, 30 million monthly unique users, right? 30 million isn't really very many in the big world picture. Blockchain.com, the largest Bitcoin wallet, they've got 85 million accounts or something like that. I mean, it's a lot, but it's not a huge amount compared with some of the massive properties and the adoption of the internet, right? Maybe we just go around the room a bit. How do we get to like 300 million people using this stuff? Do you dream of that, Chris? 3 billion people using your thing. Do you have a path to that? Is that really where you're at?
Solve problems people care about. Like, we're at a stage where all the stuff we talked about right now is really cool composable protocol features that have promise. And actually, like, really excited. Like, that sounds like a solution to a problem, for a very specific set of people. I think when you see things like Steppen, it's one of the first times I've seen a kind of crypto-native product capture the imagination of a large group of people because it interacted with their real lives in a way that they wanted. Steppen was the move to earn concept, which today's an auspicious day. Like, I don't think they've survived particularly well. They very much were reliant on new cash inflow. But essentially, you went for a walk and you would earn their coin, and essentially you would buy this NFT. It would be a yield instrument, but you'd have to actually go and take a physical action in the real world in order to get your yield. And they signed up millions of people in a pretty short period of time because, well, they made something that people actually wanted to do. And I think the only thing that we found that's done that so far is custodians who let you buy Doge or buy. My co-founder, Christine, she was the head of Robinhood Crypto, sold more Dogecoin than anyone else, but like that was what people wanted. Like, they wanted to go and like buy an asset that wasn't scary to them, that was, reasonably priced, that they could jump in, like that had fit. We just need to go figure out what those problems are. I think there are places in DeFi that show a lot of promise. I actually could imagine, some forms of banks or kind of new bank kind of style organizations starting to get some exposure to their customers of DeFi. That could be super cool. But it all comes down to building products, not protocols. And there are very, very, very few products that exist today, in my opinion.
Yeah, we were talking earlier, do we have a single wallet that solves all this? Do we have a single wallet for all chains, or does a user have to download an application or whatever, every single thing they're doing on every single chain, on every single end user app or something like that? I mean, how's that going to work? It's going to be a total mess, right?
We're probably going towards a multi-chain world, and then the question is, how can we get people to interact with all these different technologies in a way that makes sense? And that will probably have to happen from one place.
Yeah, and how much of that comes into compatibility, for example, for NFTs, Chris, that you can have essentially the same NFT and be operating it on any blockchain you want, let's put it that way, any layer one you like. How do you think about that?
Yeah, there's been a little bit of a movement in this direction very recently, although Vitalik came out and he seems very skeptical on this concept of just bridging in general. And, unfortunately, he's been proved pretty right in the last few months. But no, in general, like I think what you were sharing kind of around tokenized identity and leaving artifacts in place on chain, those chains can interact with each other, or software that sits on top of them can interact with each chain and kind of link things together. I think your email address thing's interesting. When you think about the growth of addresses and compare it to email addresses were identity. I don't think we can say the same thing today about wallet addresses. Like, the average person inside of the ecosystem today is savvy, and the average savvy person probably has between 5 and 500 wallet addresses. And this is one of those, like, I often wonder, how much are we just kind of all convincing each other there's growth here? And like, I'm making another 5 wallets and you're making another 5 wallets. And then we're like, hey, 10 new wallets. I think we can answer at this point that a wallet is not an identity in and of itself. No one has built the answer today, and it sounds like you guys are working on this problem, to what is the thing that rolls up my wallets into my identity that lets me bring that cross-chain, that allows you to build on-chain reputation, which is, I think, going to be one of the biggest, most important trends to give us true trust in a trustless environment. Because I don't think being, and this is where maybe we separate a little bit, I don't think you should have to be KYC'd in order to build reputation. I think, we will at Floor not deal with anonymous folks. We will deal in some certain scenarios with pseudonyms who have built up a certain amount of reputation, like, take like a Zeneca or someone like that. Actually, I think he's doxed now. He wasn't at the time. Someone who's like done a bunch of good work out there. You can see his like trading history over years. Like, he has a reputation, but it's not tied to a name on a passport. It's tied to like a set of wallets, but like an identity on the internet. Really, a Twitter account, I think, is that identity rather than a wallet. Actually, maybe Twitter is the Web3 identity and you just tie all the wallets up to it. I got lost in the thought somewhere, but the question was like, how do you think about bridging those things? I think you leave artifacts on chains, and I think the wallet doesn't exist yet that does a really good job of both creating, destroying, and like managing the hundreds of wallets that you probably have to actually sensibly operate on a public blockchain.
Yeah, I mean, it's interesting, all of this. We've got another dimension in wallet, which is machines or physical devices or something like that. Because, I mean, we're individuals and we have our identity, but we might have a motor car, we might have something else where these days it has an identity of its own, and it has a lifetime and it has a history, just as I have a lifetime and a history, my car has kind of the same. How do you think about that, Kjelstroem? I know you've thought a bit about that, we were talking earlier.
Yeah, I think I mentioned that before, right? There's the business relationship. You're working for some company, or there's all of this different stuff, right? Some of it exists throughout the lifetime of you, like your identity. You have that for your entire lifetime, and then other things like your diploma. You get that eventually, and now you can show it to others. But I think coming back to what you said actually about the multiple wallets, and like no one wants that, right? Everyone just wants that thing that they where they have their stuff so that they can show it to others when they need to, right? That's really where we have to go. And I believe in a multi-chain world as well, but I don't believe one chain is going to kill Ethereum or something like that. I mean, let's see what happens, right? I think chains need to find out what they actually want to cater to and how they would fit in the bigger ecosystem. And certainly what we're doing right now is trying to be that chain which has identity baked into sort of the core protocol layer. And potentially we're obviously looking to open that up, right? And not just kill Ethereum or kill anyone else. We want to actually provide that as a thing to others to build upon. And that could be other chains, that could be like Web2 applications. So it would fit in that picture with other wallets, right? There'll be APIs and ease of integration that we're looking to do so that others can easily, bridge to our world and use that within their own sort of wallet or whatever they have in order to use things. So I think that's...
Have you thought about putting your identity as an oracle on like the Ethereum network so that people can query it from smart contracts?
Yeah, we are looking to do things like that. Yeah.
That'd be super cool.
Yeah, it would be super cool.
I mean, there's no doubt that in the Web3 and the decentralized world, the identity and credentials and history and reputation are going to be something which goes through it. I look at companies like who've built on top of the networks today, companies like Chainalysis and Elliptic and people like that, who've actually built a complete business on top of it. Now they're doing on-chain analytics, but you could say, well, I could have a business that's looking at on-chain reputation or something like that and surfacing that. Completely different dimension at the same problem, but the wonderful thing about open networks is you can build things on top of them and just cut into it. I think that's something. Just as we close off, we've got 5 minutes left now, whether I'd like to go around the panel and say, well, when we are in like a year from now, what's changed? I mean, we've got a bit of a DeFi meltdown. Does that ever come back again? And maybe one way of looking upon it, but maybe that doesn't matter. There's only 4.4 million active MetaMasks have ever engaged with DeFi, right? I mean, 4 million people it's kind of some, but maybe if it disappears, it doesn't really matter. What's here to stay, and where are we in a year's time, do you think, maybe? Who wants to have a go at that throwaway question?
But just 1 year's time, or?
Yeah, when we're sitting here in a year, okay.
Okay.
No, let's not think too far out.
No, I think DeFi is certainly here to stay. I think like with anything, people took it a bit too far, right? I think it's quite like you often have this saying in Web 2, right, where it's like, hey, if you're using a product and it's free and you're wondering why it's free, then you're the product. Right? If you're using a DeFi protocol and you get a great yield and you wonder why the yield is so high, then you are the yield, right? And I think there we'll see like a big change where, actually, people will start using protocols more where borrowers or people who are on the other side are actually doing something productive, right? They're doing like real world activity and they're giving you, a yield for that. And that will maybe not be 1,000%, sadly. But it will be something that is actually sustainable and that will stay that way. So I would say betting big on DeFi and institutions, adopting there and using the instant settlement that it offers.
Itamar, do you have any ideas?
I think a year is short indeed, but I think by then. Maybe, so, when you mentioned Stepan, what's important is that you didn't mention a use case, you mentioned a product for the first time in this talk, where we always mention category, because, and I think we will see suddenly a product, and it might be more in gaming, that has very high usage, where people don't think about it as crypto or as Web3, they just use a product, and it happened to be enabled by by crypto. I think a year, it's realistic. I think we could see that in some of the Ethereum layer 2s. Personally, that's where I believe it will be. And it will be, and the wallet might be a bit less visible, but everyone will use that product without really thinking about the crypto side of things. Yeah.
Cool.
I think I have a little bit of a gloomy outlook these days on what's going on in the industry, but not too bad. I think if you look on a year into the future, I think we're in the middle of a shakedown where the less sustainable projects out there are going to be falling, right? And I think that's healthy. In any industry, just like ours, you'll see lots of things happening, and we've certainly seen that in the crypto industry over the past many years. Lots of new interesting projects have sprung up, but also a lot that might not be very sustainable. So I think that's pretty healthy. I'm hoping that a year or two from now, we'll be in a much more healthy situation where it's much more sane. And where it's actually not 1,000 times the yield, but maybe something that's more reasonable, where it makes more sense, right? What we've seen is like craziness, right? And it was the same thing back in the day when Netscape launched, right? It was complete craziness back in 1995, to go back to that time. And it happens in the tech industry time and again that these things spring up, and it becomes massively valuable, and then there's a crash, and then there's consolidation, and then it becomes sane, right? I think that we're there, and I'm hoping those projects will be amazing.
And Chris, finally.
I love going last on these things. I get to cheat. I'm going to crib and expand. So I think sounder fundamentals is just required, and I think the market's going to force it. I think where wave one of crypto growth was custodial financial speculation on a limited set of tokens, I think the next wave of mass consumer adoption comes in NFTs. I don't know if it's 12 months or 24 months, but I think people will own NFTs without necessarily knowing that they own NFTs. And I expect that to actually be the beginning of more integrated wallets. I don't know how standalone wallets are forever. I think one of the things that Stepan did that was really interesting is there is a whole wallet experience in the app. And I think it was way too complicated. And they, like everyone else, replicated all of the complexity of the protocol straight into their product design. But I can imagine more products, more integrated wallets where people may or may not know that what they're doing is truly on-chain, but just understand the benefits of it. At least that's what I'm hoping for.
Okay, thanks. Well, we're drawing to an end here. We've got us between you and lunch, so I think we'll stop now. I think actually, Tycho, I think you gave me the best quote of the day, which is I was the yield.
That needs to be a t-shirt.
That's on the t-shirt, right? So thanks everybody for coming along. Thanks for explaining about what you're doing, giving your insights.